Hello everyone, welcome to the Market Outlook midweek this Wednesday noon. And after the fallout of Silicon Valley Bank in the US and the fears that the bankruptcy of SVB, that is Silicon Valley Bank, would lead to further domino effect and that it could translate into more uh, negativities. Markets corrected on fallback of that, uh, fearing that the domino effect of SVB Bank in the US could lead to more problems. And we saw, 6 months lows yesterday on the Sensex and Nifty. And from those lows, this morning we have recovered. Needs to be seen uh, whether we are able to sustain this up move or like earlier times. We do recover, but by the time we close the trade, the markets are in red. Just to give you some levels on the indices and the markets, rupee dollar and crude oil. Well, the Sensex is up about 255 points. 58,150 is the level of Sensex. Nifty is up 85 points, 17,185. Bank Nifty up 170 odd points, 39,580. Rupee dollar equation, strength in the rupee of close to about 0.8 paise. Rupee dollar equation is 82.40 to a dollar. And on the Brent and NYMEX, after correction, a little bit of uptick. Brent is about $78.53 a barrel, and NYMEX is trading at about $72.41 to a barrel. Now, the fallout and the domino effect or chain reaction of whatever happened in US led to a much sharper and deeper correction in our markets, which led to, like I mentioned, 6 months lows we witnessed yesterday. Uh, According to the verbatim given by the regulators in the US and statements made by some of the entities in the tech universe, that the impact is not going to be as serious as what the market thinks that it would be. Our sense is that these are very, very attractive levels for some value buying, nibbling into some fundamentally strong investment ideas from a long term point of view. On the news flows, other than the news from the US about SVB Bank and the aftermath of that, there is nothing that is going to impact or have a much serious effect on Indian banking sector. This is what has been said by not one but a couple of domestic regulators as well as some of the foreign brokerage houses. And the fact is that even if that impact is going to be there, we are going to withstand that acid test. So banking is going to be one sector which is going to be in the spotlight, and by next month, second week, April second week, we'll also have the fourth quarter earnings, uh, rolling out. We expect the banking sector to do well over there as well. So I think banking sector is one place wherein you can do some value buying. Along with that, some of the stronger IT names. Though yesterday there was fear that mid-cap IT has some serious exposure to the SVB bank fallout in the US, but none of the management has given any kind of verbatim on that. And it is only something that the market feared that that would be a possibility. So it is a knee-jerk reaction that followed on some of the mid-cap IT names as well. On the domestic front, well, our sense is that given the opportunity and the correction, and again, if you are a trader or a short-term investor, I think whatever you can book as profits, you should regularly do that. Expect a little bit less in terms of short to medium-term gains, and whatever is visible, regular profit booking is advised. But if you're a long-term investor, and like always, we've been giving you some investment ideas. Identified two such investment ideas. One is from the healthcare sector, Narayan Rudalaya. This company came out with an IPO a couple of years back, and I think with the kind of growing awareness of healthcare, hospitals which are associated with healthcare sector are doing extremely well. For example, Apollo Hospital, on which again we have a positive coverage. But this time, This is a small cap universe stock, Narayan Rudalaya, and our expectation is that the earning visibility is going to grow much stronger for the quarters to come by. So the first investment idea from healthcare is Narayan Rudalaya, and the second one is from mid cap banking. I beg your pardon, mid cap cement. This is a company called Dalmia Bharat Limited. This company has got manufacturing facilities spread across India, has got a very decent market share, and given the kind of potential of consumption of cement going up and the dispatches of cement bags month on month going up, along with that input cost coming down, margins could expand, and the focus of government, state government, central government, improvement in the real estate sector, along with that, private capex picking up. Our sense is that cement consumption is likely to go up. There is also a possibility that prices of cement bags could also go up geographically in certain locations. So Dalmia Bharat Limited is the second investment idea from mid-cap cement universe. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye. And most importantly, please do not forget, these two are long-term investment ideas. So please bear in mind that you should have at least 1.5 year plus kind of time horizon if you decide to invest in either of these stocks or both these stocks. Thank you again, and I'll see you again next week. Bye-bye.